What impact will a short sale have on your credit report? Well, the answer is that it depends. Now, the words short sale are unlikely to ever appear on your credit report. Normally, a short sale is reported as settled debt. Now, with respect to the number of points you'll lose from your credit score when you do a short sale, that depends on where you start. So, if you start off with a higher credit score, then the impact of the short sale will be more severe. If you start out with a lower score, then the impact will be less severe. You see, no two people have the same credit history, and no two people have the same account activity. So, the effect of one event like a short sale is going to be different for different people. Another very important thing to consider is that the financial hardship that people normally endure before doing a short sale, something like a job loss, for example, that financial hardship tends to affect their ability to pay all their debts, not just their mortgage debt, but other debts like credit cards, for example. So it's not practical to separate the impact of a short sale from, say, the impact of a missed mortgage payment or a missed credit card payment or exceeding your credit card limit, for example. Lastly, the algorithm that's used to calculate your FICO score or your credit score changes over time. So for all these reasons, it's not possible to come up with an exact number of credit points you'll lose from your score when you do a short sale. One thing is certain, though, is that the impact will be much less severe. The number of points that you'll lose will be much less if you do a short sale than it would be if you allowed the bank to foreclose on you. So if you're in a financial jam, the most important question to ask yourself is, can I make my mortgage payments every month for the foreseeable future? Now, as a general rule, it always makes sense to protect your credit and limit any damage that you do to your credit. However, if you're running out of cash, there's nothing to be gained by spending your last dime in a futile attempt to make a few extra mortgage payments. If you find yourself in that situation, what you need to do is complete your short sale as quickly as possible and get your property sold so that you can cut your losses and get back on the road to financial recovery. In this particular instance, rather than trying to save your credit, you should focus on completing the short sale as quickly as possible so that you can begin building and repairing your credit for the future. You can't permanently damage your credit, and blemishes on your credit affect your credit score less and less over time. This is Gerald Lucas, the Short Sale Authority, signing off. Until next time.